auditing Fort Knox, and also it's not just Fort Knox. There's some in New York and there's some in Denver. I mean, the gold certificates that are on the Fed's balance sheet are a collection of all three. Fort Knox is the biggest one, but there's one in Denver, I think one in New York. So assuming all these three places are going to be audited, you're going into the bedroom or the holy of holies of the deep state, because that is the core of their power. They don't want you to know that it is. They might not even be conscious fully that it really is, but that's it. That's the bedroom. So auditing it, if they do it honestly, if Trump does it honestly, and I think Elon Musk was saying that he's gonna live broadcast it or something. I don't know if that's gonna happen. He might just be sensationalist, but it's a very serious, very dangerous thing. And these sorts of revelations, if there is a revelation, can collapse the entire inflationary system in an instant if something is found out that shouldn't be found out. This is dangerous stuff.
In today's news recap, what is the performance of gold telling us? The price of gold exceeded $2,900 an ounce last week for the first time. Since October 2023, it has risen by more than $1,000 an ounce. The price is 3 times higher than it was a decade ago. It has grown tenfold since 2000. What is going on? Where does it go from here? And how best to invest? Gold should not really be this high. Traditionally, the precious metal performs badly when interest rates rise. That is because, unlike bonds, shares, cash, or property, it does not pay investors an income. When the yields on those other assets are attractive, there is less incentive to hold the barbarous relic, as the economist John Maynard Keynes called gold. That is the case today, but still gold is hitting new records. The gold price should also prefer a weak dollar. The metal is denominated in the U.S. currency. When other currencies are strong versus the dollar, they can buy more gold. When they are weak against the greenback, they can buy less, and so the price should fall. Today's Trump-fueled strong dollar should be a headwind for the gold price. Clearly, it is not. So the performance of gold is telling us something else. The message it sends is that all is not well with the world. It says that investors are worried, and history shows that it is unwise to ignore the signals that gold sends at times of stress. So why is gold so strong today? Several reasons. The first is gold's perceived safe haven qualities when the world looks uncertain. The election of Donald Trump has massively increased the unpredictability of U.S. policy on many fronts, but notably on trade and tariffs. At the same time, gold is a hedge against inflation. Many Trump policies, not just tariffs, are likely to be inflationary. It is a perfect storm for gold. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
The gold supplies in COMEX. First of all, we don't know the eligible supplies, the stuff that's not for sale or not for sale publicly against contracts. We don't know who owns any of that. That's totally opaque. No idea. If you look at the amount of eligible gold not for sale, that's the spike in 2020 of that supply versus the spike now. It's about the same in quantity. It's a little less now. We're not quite at the record highs. We're close. But it's taken a quarter of the time that it took in 2020 to accumulate the same amount of gold. So we're going at quadruple the speed, assuming this stuff is real. And now the question, why is this happening? Look, the dry answer is that the futures are worth more in New York than the spot price in London. So you buy the spot in London, you sell it against futures in New York, and you pocket the difference. That's the dry answer as to what. But the deeper question is, why is gold worth more in New York than London? That's what we want to know. And I don't have an answer for that question other than to say that, when your body's in trouble, when you're in a panic, what's going to happen is the blood's going to exit your extremities and it's going to go into your core. Either you're in a fight or flight, or you're you're in a hypothermia situation where you need to preserve all your heat. Your hands will start freezing, you'll start shaking, and your blood will head to your main organs to protect them, to keep them warm. So we're in a dollar world. The center of the entire fiat system, not just the United States, but the entire planet, is the US dollar. And when there is stress in the monetary system, just like your body does, it takes blood out of the extremities and moves it to the core. That's what's going to happen when there's monetary stress. It happened in 2020 because there was severe monetary stress, right? They shut down the entire planet for very logical reasons, of course, as we all know. And the blood is the gold. Like the dollar is just the derivative, but the actual liquidity is the gold. The dollar trades above that. It's moving into New York, and it's moving into New York again, because I think there are serious problems in the monetary circulatory system. And that's going to come out. We don't know exactly how, but there's going to be news of some kind of financial collapse somewhere. And all the gold bugs and the metals crowd are going to say, yeah, well, we told you. We didn't know exactly what it was going to be, but it was going to happen. So we'll see what it is. There's going to be one. It's going to fall. It's going to be soon.
In today's news recap, Morgan Stanley says this key factor pushing gold to record highs is now the single biggest risk. Morgan Stanley said the main driver of gold's epic bull run since 2022 is central bank buying, but this could reverse on one risk factor. Gold's record-thumping bull run could be about to reverse if U.S. President Trump forces Ukraine and Russia into a peace deal that heals geopolitical divisions and caps surging demand for the precious metal from major central banks. That's the view of Morgan Stanley strategists in a February 14th research note that said an end to the Ukraine war is the #1 downside risk to gold, which could send it 17% lower to $2,400 an ounce in a bear case scenario. Gold is up more than 50% since the Ukraine war escalated in 2022, but lost 1.5% on February 14th to $2,880 an ounce on news reports. Presidents Trump and Putin spoke late last week about the conflict. Morgan Stanley said fast-changing geopolitics make it difficult to explain the magnitude of gold price moves using traditional approaches. However, its base case forecast is that gold hovers around $2,850 an ounce in the July quarter, with potential for U.S. trade wars to push it over $3,000 an ounce in the short term. The bank's bear case of $2,400 per ounce revolves around the thesis that major central banks across the emerging world in particular will slow their purchases of the precious metal if they believe the risk of sustained conflict between the U.S. alliance and Russia eases. In the final quarter of 2024, central bank purchases jumped 54% on the corresponding quarter in 2023, as other worries around U.S. fiscal deficits, money printing, and debt encourage nations such as China, India, Poland, Brazil, and Turkey to seek alternatives to U.S. dollar exposure. The strategists also said that real U.S. yields, measured as the yield on 10-year treasuries minus inflation rates, had eased since January in a move that should support gold prices. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
The gold standard never ended. We're still on it because of the regression principle, because of the Misesian regression principle, regression theorem. I prefer saying principle, just sounds better. All prices reach back into the past. Every economic transaction that we engage in today is connected to every economic transaction in the past, just like evolution. Right? It always goes back to DNA recombining and meiosis and reproduction. What we are today is a result of every single relationship in the past, just definitionally. So you can't get away from gold. The dollar started as a derivative of the gold that existed somewhere, and prices evolved from there. The difference now is that most of what is the dollar is made up of debt to pay those same dollars, and it loops back in on itself. So a gold revaluation, gold is part of what the dollar is because because the issuer of the dollar, the ones who issue those things, the Fed has claims on gold and it has claims on debt paid in dollars, which are claims on gold, right? It all goes back. So on its balance sheet, it has this lie that everyone knows is a lie, and everyone just thinks it's stupid. That says that the gold that the Fed has a claim on, which is in Fort Knox and other places, that's $42.22. Ha ha! Isn't that funny? So that means that all the dollars that are owed in debt are redeemable for gold at $42, which they're not. So when you okay, so let me take this to a simpler analogy. That when, let's say your kid has a few coins in a piggy bank, right, and then your other kid, this just happened in my family, and somebody needs like a quarter, right? So he goes to his piggy bank, takes a quarter, replaces it with an IOU 1 quarter in the piggy bank, right? Is the IOU 1 quarter, is that part of the money supply? It's not part of the money supply. It's on par with a quarter. That means that whoever has this paper is owed 1 quarter. But if there aren't enough quarters, then how many papers do you need to get 1 quarter, right? If you keep issuing the papers and there's not enough quarters, so the paper isn't worth 1 quarter, it's maybe worth 5 cents, 10 cents, depending on how many quarters actually exist. Right? So most of the dollar is debt. It's debt to owe dollars, but to owe what? Like, what am I owing? And that is, you're owing the gold at 42. But if you say, oh, that's a lie, I don't have enough gold to redeem the $6.8 trillion that are on the Fed's balance sheet at $42 an ounce. There's just not enough gold in the solar system to do that. So we're gonna say this is a lie. We're gonna admit it, and we're gonna say, you know what? The exchange rate is actually 42,000, not 42. Because the amount of dollars has gone up 1,000 times. So what happens? The debt, those papers that said, I owe you a quarter, they get devalued to almost nothing, which means all of the institutions that own this dollar denominated debt, they lose all of that value overnight. Just because you changed the number on a balance sheet, it sounds so stupid, but that's what will happen necessarily, because whether you want to believe it or not, whether you want to believe that gold is money, or you think that money is just a social construct like gender or whatever, it doesn't matter what you think. Gold is money. So that's what will happen. It will devalue the debt, and all the banks that own that debt will die almost instantly.
If you resonate with Rafi Farber's perspective on the looming collapse of the US dollar and the critical role of stacking gold and silver as a hedge against economic uncertainty, we'd love to hear your thoughts. Are you preparing for what's ahead by stacking? And more importantly, are you bullish on gold and silver for 2025? Let us know in the comments below. Your insights could inspire others in the community. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.